Welcome to Round the Table with Gratz Park Private Wealth. I'm Sherry Hawley, President and Senior Wealth Advisor. Happy New Year. It is 2026. I am just going to review the December month and a little summary of 2025 and where we ended up for the year, because it was quite a year. It was much better than what we had anticipated moving into 2025, as the S&P 500 index had 38 new highs and finished the year at over 17% returns. That in light of not a lot of volatility either. We saw the 20% drop early in the year after Liberation Day on April 2nd, where we dropped 20% from the highs we reached on February 9th. But from that point, the market climbed 40% before settling in, as I said, up 17.3% for the year. Most of that was driven, of course, by AI and the mega cap tech names that are investing in AI, as well as the Federal Reserve entering a rate cut cycle, giving us 0.25% rate cuts in the year. And two, we had deregulation from the Trump administration that spawned many mergers and acquisitions, as well as just favorable tax policy and fiscal policy from the Trump administration. All of that to say, it was a strong year. The economy really performed better than our expectation as well. We were anticipating 2 to 2.2% growth in the economy. Right now, once they do their final revisions, we're thinking it may end up around 2.4 to 2.6% growth in the economy for 2025. Consumers were very resilient as far as consumer spending goes. All of that to say, a strong month in December. We didn't quite hit our Santa Claus rally, which is the last 2 weeks of the year. Those 2 weeks we actually count the first 2 days of January. I still think we might be slightly negative for that Santa Claus rally. But even though we finished with a very strong year for 2025. So as we move into January, and as you read our newsletter and comments, you will get our full expectation and outlook for the market, our prognostication, so to speak. We do think it will be positive for stocks, but probably in the mid to high single digits versus the double digits we've been enjoying the last 3 years. We do have the Fed. We anticipate giving us maybe 1 to 2 more cuts this year. I do think they're going to pause this month at their January meeting, but maybe in March, as we move forward, we will get more rate cuts. A new Federal Reserve governor or Federal Reserve chairman will be moving in place in May as Trump appoints the replacement for Jerome Powell. So we'll have to see. The one thing I will tell you, even though we anticipate positive stock prices for the year, we do anticipate more volatility. We have a midterm election coming up later in the year, as well as perhaps geopolitical concerns over the weekend, of course, with the change in presidents in Venezuela from the U.S. We'll see some volatility on geopolitical concerns. We don't know what exactly they'll be throughout the year, but there will be some. And two, just normal volatility. Last year was fairly subdued, as I mentioned. Typically, we get 3 to 4 times a year a 3 to 5% pullback and a 10% correction every 12 to 15 months. So just normal volatility in that sense that we'll have to be prepared for. And with our diversified portfolios and being in good quality companies, we do think we can navigate that volatility. The final mention I would say would be on the AI story for 2026. We look to see more of the AI infrastructure and benefactors having higher returns, not just the focus on the mega cap tech names that are creating the AI. So just look for that. I think it'll be broader participation as we move forward. Thanks for joining me, and we will see you again at Round the Table with Gratz Park Private Wealth.